Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Is Seth not streaming anymore? No, he's just super late every day. That's all. All right, guys. Well, I screwed up. On Friday. I thought that Monday was going to be the 1st, but it is actually the 31st, which means that end of month flows will be today and not Friday. So, with that, now having seen that mistake, I can kind of reanalyze things. Let's come here and check. Well, on Friday, we had like a massive risk off. So you can see here the treasuries, they had a huge jump and then a further jump up over the weekend. ES just careening down. So I thought that we were going to see some buying into the close, and maybe we did. But if we did, it just was all canceled out by this macro selling. Just the market all of a sudden deciding that, yeah, this tariff thing is happening and freaking out. Here's oil. Oil is actually somewhat flat. So now starting to maybe see some signs that here's about growth affecting oil. Gold and silver, though, the big winners. It's super crazy that, again, to me, I really thought, you know, when we were getting inflation, that gold would be one of the places that you'd get a safe haven, but it was not at all. And now we're getting trade war and gold is the safe haven. And silver, still actually lagging a lot. Here we got copper. Copper also looking a little weak. The Japanese yen. Well, so there was a lot of movement into the Japanese yen, but you can see here that it did not really affect the dollar that much. The dollar, well, there's going to be kind of some competing flows in here, but when you see it like that, that says to me that this buying in the Japanese yen is flight to safety. And Bitcoin getting savaged with the equity markets back towards 8,200. Not a huge deal, but you know, there's some real problems. You get too much lower in Bitcoin. Okay, so that's where we're at. Let's make sure that the robot is on. I did the same thing thinking it was end of month, right? I'm surprised that nobody corrected me when I said that on Friday, but maybe you didn't. I just didn't see it, you know? So that's my mistake. I'm sorry. I have to say though, so like this scenario is rare. You're more likely to have the last trading day of the month be on a Friday, right? Because if the last day of the month is on Saturday or Sunday or Friday, then the last trading day of the month is Friday. So 3 out of 7 scenarios, the last trading day of the month is on Friday. And only 1 out of 7 scenarios is the last trading day of the month on a Monday. So it's a less common scenario, but we have seen it before. And the last time that I saw it, I don't think that it was an end of a quarter, but it could be wrong. But last time I saw it, they did save a lot of end of month flows until the very, very end. So we could still see, what I would expect to see is the market on close imbalance in equities to be strongly favor buying. That does not necessarily mean that the price is going to move up because of all of this other crazy stuff. In any other situation, I would be really confident and just be buying it. In this situation, I'm really uncertain. But so yeah. What should I learn first, the DOM or the footprint? You should learn the DOM. Honestly, I don't think that there is as much value in the footprint as a lot of retail traders believe. But most of the and the reason that I say DOM is that if you go and you find learning materials about the DOM, you're going to find information about how the market actually works. You're going to find a lot more actual useful information. Whereas if you go and you learn the footprint, you're mostly going to learn footprint specific setups that, as far as I've been able to determine, are random. So I really think that I have the best order flow learning series on the internet. Just go and watch my video series on order flow. I have just go, back to my main channel, and I have an order flow playlist, and go and watch that. And especially like the last 3, like the first few videos are like, okay, here's what here's like what this is actually showing you, and here are like the different possibilities. Okay, not necessarily signals, but like the different possibilities, like what's actually going on, right? And then I go into the empirical information. And that empirical information, for some reason, nobody else in the retail world is talking about it. But it's extremely valuable information. So that's why my order flow playlist is the best one out there. Yes, and in the playlist, I mention not only the books, but the studies that information comes from. Let's see here. Almost everyone I know messed this up regarding the month end. Brannigan Merritt. I also didn't notice the mistake until the closing candle in ES was just 60K when it should have been 100 plus. Okay, so you were watching. See, there was a guy on that popped into our Discord that we were talking to on Monday. I'm sure he'll pop in later, but he was saying, "Oh, I didn't see it today," and I was like, But I didn't have things open to see. I was kind of like, know what's going on, Oh, by the way, we should oh, do I not have it? Oh, well, if we take a trade, the position window isn't showing up correctly, but if we take a trade, I'll fix it. You had somebody laughing at you because of it? It's because Brannigan, Barrett, and all of those guys are actually watching my stream and then turning around and using that information for their... That's... Man, I really don't know what the deal was. I remember looking at the calendar and going, okay, Monday is the 1st. And honestly, you guys, I am just not 100%, man. Like I'm trying, but facing down the end of unemployment is incredibly stressful. There's just no other way to put it, and it absolutely affects, like, the neurons firing up there are just not 100%. Well, the main book, Banu, is Trades, Quotes, and Prices, Financial Markets Under the Microscope, okay? But I have to warn you, this is a heavy, heavy book, okay? You go to the ends of every chapter. Let me pull up here. You get a laundry list, a huge list of sources. Do you see those? Those are all, each one of those are studies that the book is citing. Like studies published by peer-reviewed journals. Okay. there's real data. Okay, so they're showing you models and then comparing the models to the actual market data. They show you mathematical proofs of the models. Okay, so this is graduate level math. It is graduate level math. It is not simple stuff. I think the book does a really good job of summarizing the main takeaways at the end of each chapter. Okay, but what I have done essentially is I have taken all of that information and found how it could possibly apply to you as a retail trader, and especially in helping you understand what we're looking for in order flow. Okay, so you can go and read the book, but I'm just telling you, go and watch my order flow video series first, right? Watch that, get the main takeaways, and then you're gonna be like, oh, I'm interested in the source, and then you can go and read that, right? So how many of the old guys who watch your stream are still watching? Oh yeah, all of them. So I don't see Lucas every day, but I think we see Lucas almost every month. Oh, I don't know. What? It's maybe been a few months since we've seen Lucas. He's around. We start talking about him, maybe he'll show up. Is it possible? Oh yeah, sure. Is this one in Ninja Trader? Ninja Trader. Yeah, you can send it over and we can pull it up and look at it. I'll even review code. So my focus for the last 6 months has essentially been to put out as many videos as I can, provide more content around the indicator suite that I sell, and try to increase revenue. I'm about $1,000 short. I think, you know, if I was the narcissist that you wouldn't even admit that you lost your day job, would pretend that nothing's going on, but I'm not interested in that shit. We're gonna be real. I'm about $1,000 short in April, and putting all of that effort into the content on the channel did not work. None of those videos took off. Even there was one video, the one about prop firms, that I really thought would like take off. And what happened was YouTube, you know, it got somewhat popular, and then YouTube cut it off. It was just all of a sudden it stops going. It seems to me that YouTube has shifted to this model with their main videos, similar to the way that TikTok works. That is, like, if it's the viral video right now, then it shows it to everybody. And otherwise, people don't really see it. And it seems like it makes it really hard. Like, I used to be able to just put out informative content and the algorithm would pick up on it and people would find it through search. Oh yeah, I'm still against prop firms, but it just doesn't work anymore. So it's just that much harder. Yes, YouTube truly used to be show you what you wanted to see. Now it's TikTok style. It shows you what it thinks is viral and is popular right now. Yeah. And what is viral and popular right now is usually a bunch of tripe. It's really I find myself watching YouTube less and less. I'll find some new subject to watch a ton of content for. Like, I watched a lot of content about snowboarding gear, but there used to be times where I would come into the YouTube front page and I would be like, I want to watch this and this and this, and I'd have like 6 videos to watch. Not anymore. Now I come in and, you know, if I don't, there's not very many videos that are like, okay, I have to watch that. It's not that. It's like, well, okay, nothing better to do than I go and watch that. Sure. It's gotten worse. So, yeah. We shift, I guess. I don't know what to do. Could perhaps give a try at double streaming to Twitch. Might help a little bit. Because it does seem like that the live stream continues to be really consistent. Same group of guys here every day. And maybe I should be working on trying to, you know, get the concurrent viewers number up somehow. But when I'm not streaming, it seems to me that my next best option is to spend more time programming. Maybe build my own platform. So that's, and while we're here, you know, every day. We're not talking about something I can be programming. I agree with some of your takes regarding prop firms, but for me, they are on the morally gray area like sports betting and casinos. Every time I watch the NBA, I get bombarded with sports betting. Well, you know, in terms of like morality, I don't think that it is immoral to start a prop firm. It is not the way that I would like to make money, but you got to make a living. It is a product that people want, and I don't think that there's anything wrong with providing people the services that they want. I mean, if the service that you were providing them was like really causing lasting long-term harm to people, then that would be a different thing. I don't know. Is like at that point you're kind of asking, is running a prop firm like being a drug dealer? Because you're a drug dealer, you're providing a service that people want, but you're providing a service that, well, number one is illegal, but number two harms people big time. So then you'd have to, but there's lots of products and services that harm people. Like if you are selling sugar, that harms people. Is it immoral to sell sugar? No, I mean, I do kind of think it's immoral for a company to say, we're going to put more sugar in our product, even though we know it's super, super bad, because we know that more people will buy it. That's immoral. And so from that perspective, running a prop firm, not necessarily immoral, but doing what some of the prop firms do, which is like, too many people are passing the combine, we need to change the rules. We need to go and send messages out to people that are doing well to mess with their heads so that they won't pass the combine. That is immoral. Then you have to talk about alcohol. And you know what? The issue, I mean, alcohol is pretty bad, but there's been a lot of research recently about weed that really strongly suggests that we have underestimated how bad it really is. It really has lasting negative impacts on the brain. It really does make you stupid. For many people, me included, because of German law, prop firms are outside now. You know, it was one of the things that I find really curious is that a lot of the people that I see doing prop firms are outside of the United States. So, whatever. Do you see, by the way, that was it Tasty Trade is leaving Canada? I tell you what. Is there any news coming today? Well, we have Chicago PMI today. So that means at 7:42 my time, 9:42 Eastern time, the number will release. You will see the number releases early to subscribers. This is one we always forget. You're going to see a move at 7:42 instead of 7:45, but we won't get the number until 7:45. The prop firm industry can be fixed if all sim funded was illegal. The trader and firm success should be tied together. So I would support that. I'm not going to say that it like fixes everything, but I would support that. I believe that sim funded accounts should be illegal. I don't understand what the difference between that and a bucket shop is. I mean, the difference between that and a bucket shop is that the losses and therefore the amount that you owe the bucket shop are unlimited. But I don't think that that's necessarily why bucket shops were banned. I think that bucket shops were banned because the bucket shop has such a strong incentive to screw you over. At the same time, though, if the only way that the prop firm could make money was you get funded and then you make money and take a payout, then it would not be viable industry anymore. Well, so for instance, okay, so what about CFDs? Why do you think that CFDs are allowed in Europe and banned in the United States? Oh, you're responding to the earlier thing about perhaps why we don't see as many traders over here, or a lot of the people using the funded trader programs are outside of the US. Or no? Well, yeah, CFDs are truly like bucket shops. I mean, that's basically why you can't do CFDs, right? It's because they are bucket shops. Yeah, but I think that it's the rules against bucket shops that are like the primary reason why you can't trade CFDs in the United States. And why did they ban bucket shops? Because it was a problem. You know, something interesting about US law, well, laws in general, is that lawmakers tend to be reactive, right? They don't actually do something until it becomes a huge problem. And basically what happened was all through the 20s all the way up until the 50s, the investment world was just absolutely plump full of scams. So many situations where you were investing in an investment advisor or a fund or whatever have you, and people's money just going down the drain. And, you know, there was a number of laws. There was a set of laws in the 30s, and there's another set of laws in the 50s to like address these things. And what is happening now today in our modern day is people have found ways around those laws to make money without really providing any value back to their clients. And our laws haven't caught up. And if it becomes a big enough deal, then maybe Congress will make a law about it. But like a law banning sim-funded, for instance, man, if I was a lawmaker, I would totally support that. But I think the chances of somebody making a law like that are practically nil right now, you know? Like, the thing that pisses me off about going back to the thing that started this is like when you look at the chart here, right? Like, there was an initial jump off, like the video took off, people were watching it, and then YouTube decided, oh, people like the video, I'm just gonna stop showing it. And then the performance follows the rest of the channel. Even though on almost every metric, impressions, click-through rate, engagement numbers, everything is unusually high. So this should be like one of the most watched videos on my channel, and they basically capped it at 3.5K. And when you go back to like my larger, actually I have to go back to main studio channel, perhaps, content, and I sort by views, and some of these videos, you know, are in the 100,000, 60,000. Like, my content just does not flow with the way that YouTube works anymore. And I think that the only way that I can address that is to make quote unquote clickbaity viral content. Fuck that. Now you're doing the same thing. Because what is ultimately the problem that I have is not providing value back to people. You know, like, oh, okay, most people are going to lose money trading futures. That's just the way that it is. I can give you all of the best information, but half the people have to lose anyways. And the thing that's really going to make you money is the things that you know that nobody else does, right? The stuff that I'm giving you is kind of like a prerequisite to success, okay? But the real success is going to come from you know something about the market that not everybody else knows, and you capitalize on it. That's where the real money's going to be made, right? So I am providing you value because I am providing you real, actionable information that helps you understand the market so that you actually stand a chance. That, in my opinion, is providing value to the market. And because we provide indicators and so forth that do help you monitor these things better than the tools that exist out there. Okay. So I feel that I provide value. And the thing that just irks me about the way that society has gone lately is and I used to think that it was kind of a factor of low interest rates, right? That because of low interest rates, money was everywhere, that the whole thing was just about convincing people to give you money and convincing people to give you money and providing as little value back as you possibly can. That's what it's turned into. And everything that I see seems to be trying to drive people into doing that. You know, make TikTok content that, you know, it's clickbaity and all of these different reasons that cause the virality, but it doesn't help anybody. I hate it. I don't want to be that. I want to make money from providing value, but I need to make more money. I need to make $1,000 more, guys. You know, and you know what's the other funny thing is that if I had taken everything that I invested into making more content for the channel the past few years, and just put it into the trading account, probably would have made enough from the live trading over the past 3 months to make up that gap. But because the trading that I have done has been really, really effective. It's a function of the market. It's not always going to be like that. I wouldn't base your whole income on it, but as a stopgap, it would help. Let's see here. Videos. What are you talking about, Anstefa? Did you like send it to me on Discord? Send me something on Discord or something? Oh yeah, you did. I see you. YouTube has joined this mod with their main videos. That is like if it's the viral video right now, it just everybody. Otherwise, people don't really see it. And it seems like it makes it really hard. Like I used to be able to just put out informative content and the algorithm would pick up on it and people would find it through search. Oh, that's funny. Okay, I'm hearing myself talk over there. This is your DOM. Yeah, I didn't let me just download it. I see. So you have the Jigsaw DOM, the new beta, open over here. And then you have your new one over here. And this one is running in NinjaTrader. One of the things, yeah. One of the things is that like, wait, it's an indicator and not an add-on? Well, anyways, you should be able to make it as an add-on, but the place where you will start to have issues is like the more updates you've got going on, right? So if you expand this to be like, you know, more than 10 levels, I'm guessing though that you're using Continuum, so that might be the maximum number of levels that you can show. You know, but when you're showing more levels and there's lots of level 2 changes coming in and you have more than one of them open, that's where you start to see problems where it's like my data grid is not able to keep up. And that's kind of one of the places that things that Jigsaw did really, really well. I'm familiar with these issues because when I worked for the bank, that was a thing. Was we had a data grid and the existing data grids on the market just weren't performant enough. It should work. You can open multiple. It was indeed a big, yeah. See, they weren't designed to handle so many individual updates. You basically you have to like design the data grid from scratch, which is a big project, big project. But it seems to work well enough. mean, the thing is if you're using somebody else's data grid, yeah, making this yourself is actually not crazy hard. There's reasons why I don't do it, but let's see here. Going back, Nick's Pizza just found your channel. What do you trade? Oh, well, we're primarily trading the treasury futures. Most of my live trades that I take will be in the micro tenure, but I don't take many trades these days. I'm super selective. But you know, we take some trades over here in the full ZN, and the robot it's trading in ZN. Make a playlist about option trading. I don't think that would do very well. Yeah, I don't know. The other issue is the video that I just put out. So I tried really hard to make it a clickbaity headline and everything. But it just didn't take. And in fact, the click-through rate on it seems to be lower than normal. Click-through rate seems to be lower than normal. Like the channel tends to average around 5% and it was getting like 2%. Where did you learn order flow? Well, so I started with the No BS Day Trading Basic course. But I found a lot of stuff like we were talking earlier. You probably missed this, but Trades, Quotes, and Prices, Financial Markets Under the Microscope. This is a graduate level book about empirically proven behaviors of markets. You know, and I basically took that information and kind of used that as my base. Because the problem with the No BS is that No BS is really good at showing you like what's going on, what the different possibilities are. But if you go and you trade his quote unquote setups, just straight out every time you see them, it's not, you're not going to make money. And so what does he say? Well, he says there's context. Right? You have to take them within context. And what I've essentially been able to do is to help tie those two things together, right? What is the context? How do you determine like what is context that matters and interpret those things correctly? And you know, then how does that relate back to what you're actually seeing at the DOM? Because once you understand the empirically proven behaviors, it really helps you focus on what you're looking for as you're watching it, right? So I am familiar with the Norden style of stuff too. You have to understand that the Norden thing is quite different. What Gary Norden is doing is essentially arbitrage, right? He's finding an instrument and another instrument that is extremely closely related, and you know, when they kind of diverge, trading that and understanding why they're diverging and everything. Yeah, you add a bunch of different related assets all together and you can kind of sort out when to trade it and when not to, in ways that maybe the robots aren't as good at. And that's essentially what Norden is doing. But I really think if you go and you watch my order flow playlist here on YouTube, that it will give you insights into both of styles. And I really think that my content, which is completely free, is the best educational content on order flow on the internet, period. Funny how you said it. Context plays a role in order flow, but no one else's. Well, John Gray, he talks about it, right? But I think the issue is that when you say context, basically what he says is, okay, well, I just know in this situation, I'm looking for this because of this, and this. But it's kind of like, it's this really kind of vague higher notion that because the issue is he knows what he's doing something beyond that, but when you're trading on intuition, we don't necessarily understand ourselves very well how we're getting those answers through our intuition, right? And what we've been able to do is we've been able to kind of systematize and codify it. What are you actually looking at? You're trying to predict the future orders. So how do you, now that you understand I'm predicting future orders, how do I predict future orders? And when I look at every event and piece of information out there, when I look at it in the context of how does it predict future orders and like how many future orders does it actually predict? Now we're actually getting somewhere. Right. And that also gives you, I think, a lot more useful, like some of the things that are the most useful at predicting future orders are things like it's the last trading day of the month. That tends to be a really big flow. There is macro selling because of Donald Trump's trade war. There are all sorts of things that happen from places where momentum strategies will get involved. Those are all things that can help you predict future orders, right? So I've turned context into how do we predict future orders instead. You explicitly stated context shouldn't matter. I didn't say that. You say a lot of weird things, Lloyd, where it's like, I didn't say that. Fat cat also. I don't get the fat cat thing, man. I've had so many times where people come on the channel and are like, oh yeah, I really like Fat Cat too. And it's like, okay, I'll go watch it. And first of all, I just can't watch it, man. Because the guy is like, makes like a 2-hour video where he tells you just like one simple little thing. I find it grating. And more broadly, I don't really feel like that the things that he says about order flow really provides a whole lot of insight into order flow itself. I think more often than not, he talks about retail trader kind of nonsense. And also with the way that he talks, it kind of sounds to me like he doesn't really use order flow in his trading. It sounds to me like he's primarily trading price action, you know? Now, I said everything can't be backtested because the test isn't taking context into account, and you disagreed. Yes, but I didn't disagree because the context doesn't matter. I disagreed because if you're doing a backtest, you can include the context as one of the parameters into your entry. But there's another problem with it. And that is, you're saying that certain things only matter within a certain context. And that does not really make a whole lot of sense, right? For instance, the which one should we go with? Let's go with the strong autocorrelation of order flow sign. So if you go and you pick a random order and you say that it is a buy order, and then you come back an hour later and you pick another random order, it is 0.5% chance higher than average that it will also be a buy order. And we believe that this is caused by large meta orders. There's people that come in and they're buying huge amounts of these assets, and it takes them all day, if not multiple days, in order to execute these super huge orders. And so that's why you will tend to see imbalances in the order flow that are persistent, and the market has a long memory. Okay, so that is something that matters all the time. I can look at almost any data set and see and verify that property within that data. It's an extremely consistent property of markets, and it is created by the very rules of the market and in the way that people execute things. It's not just created by their psychology, right? But a lot of the things that your guys are talking about are like it only matters within that context. And like I could only potentially prove that thing if I was able to look at that thing within what I believe is the correct context. And the issue with that is if I can't codify what that context is, there's no way to verify that. Right? So you're essentially concocting this scenario that you can't prove anything. And I really think it's because otherwise you would have to face the reality which is that there's not actually a real empirically proven behavior of markets in there, right? Now that doesn't mean that the context doesn't matter. Because what am I saying here? The thing that matters the most is predicting the future orders. And I can come in here at any one of these individual things and I can say, does the end of month, last trading day of the month, predict future orders? Actually, you can go and you can test that particular thing. And you can say, are there changes in order flow when daily, like when you look at daily moving averages and how momentum funds will react to those daily moving averages? Actually, there's quite a bit of evidence to suggest that that does predict orders. And does Donald Trump's tweeting about things, does that affect order? Yes, it does, right? And I can take all of those things and add them together, right? It's basically, I'm like, I can prove this thing, I can prove this thing, I can prove this thing, and then I can combine them together and hope that that works out. And does that work out when you combine them all together? Well, it remains to be seen. I kind of think that it is been shown, which is to say, I really think that a lot of hedge funds, this is what they're doing. From their description and everything, they're super vague, but if you actually understand these things and you look at their comments, it all seems to fit. But retail traders, again, they're always telling me, well, okay, but it matters within this context and all that sort of stuff. And it's kind of like, well, okay, but how do you know that it's not the context that decided things and not your little technical setup? You know? Like, this doesn't make sense. So that's what I was saying. So here again, I think you like vastly misinterpreted something that I said. If we're going to prove something, we have to prove it empirically. That's all. I mean, if you can codify a particular context and show a certain behavior within the context, then great. But I've never seen that sort of thing, right? At that point, you're putting too many caveats on the thing, making it so that you just can't prove it. We should be able to like isolate the individual thing that we're looking at, right? Like if we think that fair value gaps matter for whatever the reason is, right? We should be able to look at it statistically over the whole market and prove that. Why is it that it only matters in certain situations? I mean, that can happen statistically, but it's kind of hard to find and prove. A hedge fund owner told me market profile is what they, well, lots of people try lots of different things. You know, like there's another issue, which is like somebody has success and then they say, this is how I did it. But you don't actually know if that's what caused their success. They themselves might not understand it. I need empirical data. So using TGEX, what does that mean? And Trump statements, then you could potentially backtest that, potentially. Yeah. Oh, so you're not trading right now? I am, because I lost my day job. I have been much more risk adverse because, you know, the account's only so large, and part of that, you know, pays for monthly fees and things like that. And we want to keep the stream going for as long as possible. So I have taken back on taking risk yet. That doesn't mean that I never take trades, but it's like I've gone from like maybe 3 a day to like 3 live trades. I used to be like 3 to 5 live trades a week, and now it's maybe 1 trade a month. So, but we take sim trades. Oh, I see. So using the example that you just used, Trump statements, you could backtest that. Sure. So you could look at every time that Donald Trump tweets, and then orders that are submitted to the market during those times and not during those times, and determine that Donald Trump tweeting tends to trigger orders being sent to the market, right? You could probably even go and say, when Donald Trump tweets about trade, that the orders tend to be sell orders. Probably is the case. How would you run a 5-year backtest excluding trades taken during Trump tweets / speaks? Sure. So I have an indicator. What's the best way to show you this? First, just showing you the name of it in my indicator package under speculator, Seth. There is news warning. And in this, you can set it up to, when a news event is going to come through, and you can set it to like tell it to not trade during those times, and like whether you, how many minutes before and how many minutes after that you do and don't trade. Okay. And then if you come into the Ninja Trader, I don't know if I put it in saved or in the main folder. I think I put it in the saved folder. There's a news.csv. Okay. And in here, you put the date time of all of the news events that you want to have. So what you could do is you could use a crawler of some sort to export every time that Donald Trump made a significant tweet and add them in as news events. And then the backtest wouldn't take trades when Donald Trump is doing things. And if you are trying to backtest like a technical setup sort of a thing, makes a lot of sense to do that, because it's like, oh, well, I know during those times the order flows are going to be so strong from people trading Donald Trump that it's going to trump any kind of technical setup that I have. That totally makes sense. But I think what you're going to find is two things. Is that number one, even when you take those things out, the market is very, very random. And number two, that those things are the primary movers in the markets. That's when you see the most movement, and, everything else is just kind of crumbs. Like that kind of a setup doesn't really make sense as for a retail trader, right? Like if I'm a prop firm or like an algorithmic trading firm, and I'm taking thousands or millions of trades a day, then that kind of works out. And it's kind of like, well, okay, except for that there are like breaking news, and how do I deal with that? And I tell the algorithm how to deal with it and stuff like that. But, there should be like, because I'm trading all the time, right? Taking thousands of trades. But if I'm like a retail trader and I'm taking like 3 to 5 trades a day, like you're not going to take enough trades for that property of markets. Yeah, like because an actually like empirically proven inefficiency in the market of that nature is going to be super, super tiny. So you'd have to trade it a lot to make money from it. You know what I mean? That would be a legit test, but did you exclude news drops on the preview? Which backtests? So, because on a lot of them we did. There was one specifically that we really did it with, but I think like one of the things is you come in and you do a back test, right? And you show that it's net unprofitable. But, well, when I look at the performance of the strategy, it's net unprofitable because it took really big losses when Donald Trump tweeted or something like that, right? And I could be able to like look at those outliers and exclude those outliers and then redo the stats. But I've never had a back test that came out like that. Like, because you can look at the trades, right? You can look at like the max winner and loser and all that sort of stuff. But every back test that we've done, like the results come out close enough to random that it's not even worth like going that deep, right? Like you can go and do that extra effort. It's just like, it's probably a waste of time. And that's kind of like the larger problem is like, where should you spend your time? Because there's an infinite number of quote unquote technical setups there's an infinite number of people claiming profitable strategies. There's no end to it. And if you go and you do back test every single one of them and take it to fruition, like, it'll never end. Even if you're not backtesting, I mean, backtesting just kind of speeds up that process, because if you're not backtesting, then you're going to trade it. You're going to trade it for months and years before you find out that it doesn't work, and then switch over to something else, right? And if you're doing that and it takes like 2 years to figure it out, then that only gives you, like, 5 different strategies that you can test in a 10-year period, right? Versus we backtest it, I can spend a day to a week doing a particular strategy and then showing that it works or doesn't work or whatever the deal is, right? Doesn't seem like a very effective way to go about trading. And what I'm saying is, let's see what we can prove about the markets first, and then see if we can develop profitable strategies off of the things that we already know are proven, and or try to further our knowledge of the market along that space. In other words, like, if we have this space, and this space is all possible trades or all possible strategies, and what we can do is we can, like, take this little thing and we can say, oh, well, this actually works, right? But we maybe can't take advantage of it for some reason, because we don't have enough capital, or we're not fast enough, or wherever the deal is, right? But maybe there is a trade right here that actually does work, right? Wouldn't it make sense to start digging along that same vein, rather than just randomly going out here and picking random spots out in the solution space every day? What do you think is more likely to find gold? Right? I really like the gold analogy, right? Because what most people do, the bias that people have is, this guy found gold over in California, so let's all go over to California and try and find gold, right? And what you really should be doing is learning the geology and understanding the things that kind of affect where gold is likely to come from, and then go and find areas, do surveys and so forth, find areas that have gold. Like, if you're panning for gold in the river, because gold is heavy, it tends to get deposited in the river bends where the water slows down. And it also tends to accumulate together with other minerals that are more common. So, like, iron is heavier, right? So you want to go and find, like, a spot on the riverbank, maybe behind some rocks, where, like, a lot of black dirt gets deposited. And that's much more likely to yield gold for you, right? You do all this survey, and then you realize, oh, actually, maybe we should go to Alaska, because that's where the gold ended up being, right? That's where the gold ended up being. Be the one to sell shovels? Well, you know what? I make my own shovel, and I use my own shovel, and you can buy my shovel if you want, but I'm digging too. I would hope all traders evolve as they learn more. Well, sure. I guess the thing at issue, Lloyd, is that a lot of traders seem to believe things that just aren't so. Right? Like, that's the bigger thing that I'm trying to say, is that we have a really strong reason to believe that almost all of the things that retail traders are trying to use are nonsense. I don't get a 5-year back test. Well, because if it's less than that, you can't prove that there was actually an edge there. Right? So again, if I go and I just create a strategy that takes a random trade every day, that is, at the beginning of the day, I randomly select a time for it to take a trade, and I randomly select a direction. It takes that trade and then holds it for 30 minutes. It does that every day. And I backtest that over a year, and I do it 1,000 different times, then 40% of those will come out profitable. 40%. Doesn't seem too bad, does it? Right? Take 100 traders and 40% of them, they're profitable. And are you going to go then and then say, oh, that's the way to do it. I'm going to do that trade. I'm just going to use that seed in the random number generator. This is ridiculous. It's just like the whole thing that they say that if you put 1 million monkeys in a room with typewriters for millions and millions of years, eventually one of them is going to write Shakespeare. And then are you going to go and say, oh, we're going to make all these articles about the monkey that wrote Shakespeare and what makes monkeys that write Shakespeare different from other monkeys and all of these sorts of things? No, it's nonsense. It's random. It's random. There's some threshold that we have to meet to be able to prove that something's not random, right? And so there could be a space of things like a set of strategies that only worked for a brief period of time. And that period of time isn't long enough for us to statistically prove that there actually was an empirical behavior to it. But then at that point, why does it matter? Like if you can't trade it for years and years, it's not really useful to you. Like I would hope that you're looking like the long term. Something that's some sort of setup that's sustainable in the long term. By the way, I don't see where it was, but somebody asked about how would you backtest things like sentiment. So there are sentiment surveys, and you can just, you have the historical reading of the sentiment surveys and when those are released, and you could backtest off of that. But what you'll find with that one is that most sentiment surveys lag. You might be able to sort out what sentiment is from social media, and there's actually a lot of studies about that. Kind of a different thing because those all studies were done back when the Twitter API was different, but Twitter was different. But they did show that social media sentiment was an effective predictor of order flows, yes. The only strategy that works as an order flow would be an FCM. So you've got to go back to like today is bearish because of tariffs. Yeah, probably. Question is, how far can it go? The treasuries aren't really moving a whole lot, so there should be, Mikhail, though, because it's the last day of the month and last day of the quarter, there tends to be an imbalance in favor of the buyers based on what we know about how the funds performed and everything like that this month. There should be a strong imbalance in favor of buyers. So I would expect the market on close imbalance to be in favor of buyers. But the amount of volume that we're seeing from the macro trade, especially on Friday, is so large that it could shadow that. Okay. So anyways, going back, what are there are a couple of things that we can kind of I think kind of broad takeaways that we can take from the empirically proven data, okay? The first one is that prices are martingales, essentially. All of the data that we have is that prices are martingales, and market makers intentionally inject randomness into the price. So price on its own is not a very effective predictor of anything. is basically the gist of it. And we also know that all orders have a strong impact. So any kind of statistical, technical edge that you could possibly find in the market, you know, like people will find those, start trading them, and remove them from the market. And it's extremely easy on the short time frame to eliminate those kinds of edges from the market. Meanwhile, because all orders have impact, you can have these things like, for instance, pension funds that have to buy at the end of the month and the end of the quarter. And they could be buying regardless of what we know about what is likely to happen with tariffs, for instance, right? So you're going to go and you're going to see all of these guys buy, and then you're going to look at that from a technical perspective. Well, there was a big buying. That must mean they know something because the market's never wrong. I'm going to buy too. And then, oh, whoops, tariffs next day, right? Like that's the sort of thing that you can be gaming out right now. So the market is very statistically efficient, but it's not very informationally efficient. It's not informationally efficient because all orders have impact. So regardless of whether they're trading because their pension fund just has to at the end of the month, or they're trading because they think they know what's going to happen with Donald Trump's trade policies, right? So the market can't be informationally efficient. That's the biggest thing. It's the biggest thing. The markets are statistically efficient, but they aren't informationally efficient. Once you have that framework, that I think gives you a really, really big hint as to how you as a retail trader should try to develop your edge. Yeah, you want to understand the empirically proven behaviors of markets. Those are kind of prerequisites, I think, to getting yourself good positions and being able to interpret what's going on. Because I can come in and I can say, well, I know that there's buying at the end of the month. So when they buy at the end of the month, I'm not going to read that as the market thinks they know something, right? But if I see selling off of a Donald Trump tweet, that's people reacting to that Trump tweet. That's what the markets think about that Trump tweet. And I can put it into context too, that like, well, what really matters is future orders. So I just know that I'm seeing selling in the market because that doesn't necessarily tell me what GDP is going to be, right? Yeah. Now you can kind of filter out what we know and what we don't know to actually select a good trade where I can say, here's something that I do know that does predict future orders. Market's not currently factoring it in. And I have a setup, something that makes me believe that the market is about to start factoring that thing in. And I'm going to get in front of that order flow and make a profitable trade, right? That's now all of a sudden you have real trades, right? So understand empirically proven behaviors of markets so that you understand what you're looking at first, and then look at the market and how it's trading based on information, different flows, and use that as the basis of finding trades. And your trades are going to be, everyone's going to be an individual trade. So now we're really, really getting into something that's not really back testable, right? But all of the individual components of it were. Okay? And I think that that's much more likely to results in profitable trading. Now, that's a really complicated and nuanced explanation of things. So what I say instead is, guys, just trade the news. Like, stop looking at the chart and trade the news, because you're going to find a lot more edge from trading the news than you are, right? It gets people closer on to the right track, right? Knowing that way ahead of time to do a day trade is really hard. Yeah. Well, I mean, it not only is it really hard, when you say really hard, that to me is kind of like, well, it's, you know, you're not going to be very successful at it. I think that, you know, with the right amount of dedication, that most people could do that. But the bigger issue is that it depends on what you know in relation to other people, right? Well, it's kind of to our advantage that most retail traders don't understand these things. And frankly, even a lot of the professional world doesn't understand these things
Block
yet.
sell.
Still a lot of people, like a lot of boomers that still live in the world of the market is informationally efficient. And we can capitalize on their mistakes. Right? But the thing is those don't, this situation where something, market's not factoring it in, and you like know when it's going to start being factored in, they don't happen every day. So we have to be really, really good at understanding when we're actually in that situation. That's the real challenge. And it is something that with practice, I think you get good at. But that's where the challenge is. Look at the DOM, know how limit orders are interacting with each other and how market orders are hitting limit orders. Yeah, and trade the news. So I mean, the whole thing is I'm watching the DOM. If I'm watching the DOM and I don't know the news just hit. By the way, I totally spaced. What happened with the... Oh man, nothing happened. Oh, that's interesting. Chicago PMI was 47.6 versus an expected 45, and we did not really see a whole lot of any activity off of it. Okay. Knowing when to jump in because others are seeing what you saw some time ago and being right. That's, yeah. You gotta be early. Yeah, another way of looking at it is I'm going to predict an order of flow. At what point do I say this flow is going to come through? I might say over here, I suspect that it's going to happen. And here I've seen enough that I do think it is happening and I take a trade. But here is when we know that for sure, like proof that it actually happened. But now it's way too late because that's the end of the flow. Would be useful to have a news tracker. Well, like I said, I do have the indicator that tells you upcoming news events. I haven't, because I have these other ones, these other charts, I kind of changed around because the old version of this chart did have it on. But I think that I have to update it for 2025, and I haven't gotten around to doing that. I got to update the CSV file for 2025 economic events, right? Okay. So anyways, now that I've laid out like what we know about markets, right? So then somebody comes in and they say something like, well, I know the algorithm that the market makers use and how they screw everybody up, and I can use this like one simple pattern, and yeah, right. That contradicts everything that we already know about markets, because what do we already know about markets? Statistical inefficiencies get taken out of the markets very, very easily. What really drives markets are new order flows and not necessarily the market makers. Like, it's just the whole thing flies in the face of everything that's proven. And now you want me to come in and throw everything that's known away for this crazy theory because some crazy guy on the internet claims that they made money. Who knows? I mean, I think at this point it's pretty well established that guy does not make money from trading. I'd be interested to know how much he's actually lost, because the last guru we had this discussion with, they lost $1 million. They'd made all this money from selling stuff, and then they lost $1 million. That's crazy. That's crazy amounts. I don't think I could, I would be very, very upset with myself. I don't know if I could live with myself if I had lost $1 million trading. Like if I had stacked away like 5 million and then I lost 1 million trading the market after I'd already set everything up for good, then that would be a different issue. But like, man, come on. At what point do you say like, oh, what I'm doing doesn't work? So how do you avoid getting taken for that ride? Demand empirical evidence. Okay, you believe that a certain thing works. What empirical evidence do you have to suggest that that might be a good way to trade? So most of the time they don't. Most of the time it is something that they have used deductive logic to arrive at. And the issue with that is that there's all sorts of assumptions and pieces of information that they might have used to arrive to those deductions that are incorrect. That's why we have to verify it with empirical data. You save yourself so much time if you just rely on empirical data. You could trade Octavius. Wouldn't be where I am. We wouldn't understand this stuff if we didn't insist on empirical data. I'm just lucky that I had been given enough correct information from traders at a bank to kind of know what I was looking for, and then was able to go off and find the empirical data. Otherwise, I would probably be a lot like most other retail traders and be chasing all of this other stuff. And yeah, I'm a programmer, so I'd be backtesting, but I would probably still just be spending most of every day backtesting nonsense. So I was like, okay, well, so I got that monologue out of the way. We could try doing some programming stuff. I opened up Reddit, and the first thing that I see on Reddit is, how did people apply for real jobs in the time before? Yeah, like in the 90s? That's crazy. Applying to random jobs online is as productive as swiping on data. It sure feels like that. I do not. I mean, the issue is that I'm getting dates. They're just not marrying me. Treasury, by the way, has been pretty solid net selling. It was a net buy before, so like our imbalance is not really anywhere close to a trigger, but from r/quant, what is technical analysis on this sub? The sub seems to wholeheartedly be wholeheartedly against any mention or use of technical indicators. Does this term refer to any price-based signal using a single underlying? So basically, EMA 16 minus EMA 64 isn't a technical indicator. If I merge several flavors of EMAs into one signal, it's a technical indicator. Looking at rates curves and computing files is technical indicator because it's price-based. When one looks at intraday tick data and react to a quick collapse of bids and offers greater than a given threshold, is that a technical indicator? Technical analysis. A set of Please, people, spend money to learn if you want to do this right. Where are they going to spend money? I don't know if there's really anywhere that you can spend money to effectively learn this stuff, to be honest with you. Buy the book, buy this book, I guess. The right way to do it would be to buy this book, but I think I've given you really good help with my order flow playlist. No need to spend money. All it takes is some late night reading. By the way, if you don't have a job right now, how about you work as a freelancer? Yeah, so I can totally do that. There's kind of some things like if you have a job that you would like me to program and you're willing to pay me, then we can talk and I can write up a contract for you and totally do it. I've looked at doing things through Fiverr and things like that, and it kind of looks like it's like that's not really a very good gig. Like it doesn't work very well going over there because basically you just get like ground down to the lowest price and all these sorts of things. So it's I'm yeah, don't look at Fiverr or Upwork. Is the Upwork the better one? Try TopTal. Okay. Yeah, in all honesty, there are a million things that I could try to make money on the side, and I just haven't come across one that really makes me feel confident that it would be worth putting my time into. They all kind of feel to me like worse versions of making YouTube content, you know? Like, so it's kind of a question of productivity, right? Hire freelance talent from the top 3%. How am I going to be top 3% talent? Exactly. How does that work? Okay, let's put it this way. How does TopTal's system work differently from Upwork or Fiverr's? Right? Because if all they're doing is they've got the exact same thing set up, and they just claim that we're more high level, more top tier talent. Yeah, if all they do is the same system and they're just marketing it differently, then that doesn't give me a whole lot of confidence, right? Difference between Fiverr and TopTal. Okay, TopTal focuses on connecting businesses with highly vetted top-tier freelancers. In today's digital age, freelancing platforms have become essential to the professional world. It's important to compare Upwork, TopTal, and Fiverr as three popular platforms that connect employers with freelancers worldwide. This kind of reads to me like something a GPT would make, except for like a GPT that's trying to write something for elementary school. Okay. Features and benefits of TopTal. TopTal is a leading freelancing platform that is known for its high-quality talent pool. TopTal claims to have a rigorous screening process, ensuring that only the top 3% of freelancers are accepted. This means that clients can expect to work with highly skilled professionals who have been carefully vetted. The platform also provides personalized matching, allowing clients to find the best freelancer for their specific project needs. With its emphasis on quality and expertise, TopTal offers a reliable and efficient solution for businesses looking to hire top-notch freelancers. Okay. So that makes a difference. So then what it turns into is apply as a freelancer. Sign up with LinkedIn. And I guess this kind of goes into a larger thing that I've been saying is that it really seems to me that income in the future is going to be less reliable. And I think that that's going to start happening to everyone. Or let's say if you look at the economy and you have percentage of people that have jobs that consistently pay every month for the past 10 years, or they've been able to hold a job that and get paid every month for the past 10 years. And I think that the percentage of people that qualify for that is going to go down. That's what I'm seeing. Hey, you can take total projects, earn a lot for some weeks, and build a larger self-funded account yourself. And this way you can make long-term... Yeah, I would really like to trade longer-term strategies. Oh, total projects meaning top-tile projects, yeah. Well, what I would really like to do is develop my own platform. I'm watching Ninja Trader get bought out by Kraken, and I'm like, I can make a better platform. This is it. Could I make something that's worth $1 million? Like if they're worth 1.5 billion, could I make a platform that's worth $1 million? I think I can. I really think I can. I think that I have the skills and insight to understand what would make a good platform, that I'm practically obligated to make my own platform. I just don't know how to fund the development of it because I don't have the time to develop a platform. My wife works like three out of the 5 work days of the week usually, and then the weekends too. And when she's gone before I'm done with the stream, and she doesn't get back till 9 o'clock at night because she's a flight attendant. Just quite ridiculous that you do all that and only make like after taxes and everything else only makes like $2,000 a month. How do people live off of that? It's crazy. Well, I don't think that anybody probably does on their own. It's not right. Like, this is one of those situations. I'm not even sure like what you get paid should be primarily a factor of supply and demand, but I don't think that that's what's happening here. I think that the way that the rules are set up and everything kind of like unfairly disadvantages flight attendants. There should be law changes, but I digress. I'm getting caught up on this thing. So that doesn't, and then I have 2 toddlers that are here. Like if all my kids were in school, then it would be a different thing, right? I could just spend all the time that they were in school working on my platform. I can spend this time, but today I'm talking to you guys instead of developing. PayPal says, I agree. Income/job security will diminish and drop. A good point. That's why I'm going to make my little farm. You want to live? You got to buy food. Well, I think that the split side of this is going to be that the opportunity for people to make large sums of money from consulting or short-term jobs or whatever the deal is, I think will go up. I think that there's going to be a lot of situations where you do work for something, you can do the work with AI, and you're so productive that you can make, like $1 million in a month, and then it's okay that you didn't find job the rest of the year. That's where I kind of think that we're going. I really don't think that robots can replace developers. I think that you will need significant advancements in large language models to replace developers. I think that it will increase the productivity of developers, not enough that you won't need as many developers. So right now, it kind of seems like that there are more developers than jobs, but that is probably a function of the low interest rates and everything, and the market overreacting. I think all of the people that have been going into development and everything. Well, I've said this many times, but we draw the picture is that we had like this huge. Okay, so here's like developers coming up, right, and then we had this like huge increase in developers, or an increase in demand for developers after COVID, and then it dropped, and now we're like this, right? And what is happening now is less people are going into computer science. So when the demand comes back up, there's going to be this shortage, right? And AI might be enough to make this gap okay. But I think the idea that you're going to need less developers is preposterous. Current AI technology. Well, not just with current AI technology, with where I see the AI technology headed. Problem. When we get back to this point, that might be 2 years from now. What do I do in the meantime? I created a platform in my past and I worked 16 hours a day, 1 year straight, and it wasn't a time when I did not have a wife and kids. Yeah. Well, I think that I only need to get to a point where it actually does something interesting and useful first, and we can start selling it, and then that might help fund it from that point. But yes, I would be spending all day. And hiring people and LLMs are unable to replace a good dev because you need a human to figure out what other humans really want from a solution. You can't have the AI talk to a bunch of humans and ask them. I don't know. The issue is really that the LLMs are the way that it's forming and doing things is very different from the way that we as humans are, and it's just not very good with logic and sequential logic and things like that. So like and it doesn't have a large enough context window, so it just doesn't write good code. It just doesn't. And right now, I think that LLMs are really good for like when I get stuck with something, I can give it like a really specific thing. Like, okay, here's my code. Fix that piece of code, and it does that really well. So I don't get bottlenecked as much. But this idea that it's just like, oh, I just tell it what I want it to do, and then it writes the code, and I vibe code, or it's preposterous. Doesn't work. He was a dev. Know your client and his intentions really well, and that's well. That should be the role that is for the product owner, product manager. Could an LLM replace a product manager? Maybe. There are some parts of what a product manager does that I think an LLM could do better. Oh yeah, so I forgot here. I was not done filling this out. There we go. I need extra work or income possibilities. Oh, man. What kind of developer? What's your primary experience? And I don't know if I fit into any of these categories. I could say full stack. They don't even have... Oh, there they have a back-end developer. But what I really am is... Well, let's just say DevOps and say 5 years. Oh, I didn't even notice the S&P 500 had completely recovered its losses, so that's a good sign for the buying at the end of the day, right? There we go. Okay. There we go. Well, I submitted that in. You'll see how that thing works. That should be interesting. Well, we're thinking about it. Let's come and see if anything got posted today. Well, I've done that one. Yeah. Hmm. You going short again, Octavius? Oh, well, I didn't even notice we just dropped there. Oh, no, on no volume. That's interesting. Here's one. Oh, now that's interesting. I found a job that has 0 people clicked apply on, and it's been up for 10 hours. Well, the technologies they want me to work with are ones I'm not familiar with. Riverton. That's There's a few. Okay, that should be good. Hmm. I missed Verax's comment there. When is the revolution in France? I tell you what, man. After this week, I think the world is going to be very different. I think so. The whole thing was tariffs are supposed to be a negotiating position. And that's not to say that I never thought that any tariffs would get implemented. Part of that whole process is the tariffs getting implemented and then them going, oh, no, please. And them quickly making a deal afterwards or who knows what. But it kind of seems like that I've seen some shifts there on that. Like, one, maybe he really does. Trump is starting to say things and do things that really suggest to me that he always just wanted tariffs. Straight up. But then another thing is that it kind of seems to me that, like, tariffs as a negotiating position is not working. Like, it is the threat of tariffs is not causing countries to change their behavior at all. They kind of just double down. Like, I don't see where is Canada, or Europe gonna reduce their auto tariffs against cars from the US. Nobody's discussed that. So it kind of seems to me that we are going to get tariffs. And so the next question is just like, how long does the pain last? Because last time around, it was back and forth, like, oh, it's going to escalate and yada, yada, yada. This time around, maybe it's just like, okay, here's the president's policy. Reciprocal tariffs. Now I don't have to touch it. Markets might be more of a one-time thing. Can we actually get interest rates down so that we can start getting some investment back into the economy and we can pull off the transition that they want? Because that doesn't seem to be cooperating right now. But this week has some of the key dates. Kind of seems to me that by the end of April, we should be existing and we should probably see the world very differently from how we see it today. Octavia says the peace deal is turning out to be a shit show. It is. It is. Like, okay, so he had some trouble with the Ukraine side. Now he's having some trouble with the Russian side. And I kind of think that he's going to be like, well, I don't know. If Russia pisses him off badly enough, he might just, try and, who knows? I guess I can't really guess, but it's not going very well, is it? Doesn't sound like it's going very well. All right, well, I'm going to submit a resume or two, I think. Nope, that one's not going to go. That one will work, but I'm going to have to create a new resume for them. Oh, maybe it's already in there. Always makes me a little bit nervous when I see the treasuries at the low of the day and not really doing anything. I think through most of our history, that has kind of been a sign that it's going to reverse. But I can remember some times where it would sit there like that for a long time and then just all of a sudden, badoosh, 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 you know, like go really crazy. And this is the kind of situation where I think you could get that sort of a thing. Although maybe not to the downside. I don't know. I'm not quite sure what's causing the selling. There's a pretty strong move up in oil. That could be a factor. It does seem like ever since oil started taking off that the treasuries have kind of been tilted to the downside. You think the bot should have fired? No. It's not gotten anywhere close to an imbalance, a strong imbalance today. So there is kind of a problem, isn't there? Like most, if you want it to take a trade every day, that degree of an imbalance is not practical or realistic, right? So how do you deal with it? Set it to be only like 2%? Would take a lot more trades then. Or some way of filtering, like changing the threshold that you go at based on some other factors about the day. Another thing that I would like to add, this one is just the market order imbalance, but there's also things like the R squared of cumulative delta itself and the correlation between cumulative delta and price. So those are all factors that I could combine into the algorithm and creating a voting system. Right? So that something that's a little bit more fuzzy, or machine learning it. I don't know. Man, it's dry today. I wonder, isn't it supposed to be raining today? Maybe it's just getting hot in here. About looking at imbalance across the strip. Yeah, we could do that. But what do you mean by make the parameters adjustable? I mean, the parameters are adjustable. Like if you come into the strategy here, like manually they're adjustable. The deviation trigger right now is set to be 7.5, which means that for it to trigger long, it has to be 50 plus 7.5, and for it to go short, it has to be 50 minus 7.5. Because we used to have it at 10. Today, I don't think that it would have triggered even if we had it at 5. But I don't know. like I could see like it justifying a trade short in one point, but it hasn't been that eventful of a day. So, you know, from my perspective of what I'm looking for, I kind of feel like that I'm okay with it not having traded today. But like from the broader perspective, especially if, you know, we want a lot of people are going to be attracted by this algo, you know, we probably would want it to be triggered more often. I don't know. Okay. That one's good. I would be very surprised if I did not get a callback on that particular posting. Top 10 bid ask, say 53%. You know, I kind of was thinking today, when I woke up today, I was like, okay, make sure you turn the robot on and then we can do some programming stuff. I'm kind of wondering if I should just make it its own indicator to be whether I should use a market order or a limit order based on whether I want to buy or sell. That's the next thing that I want to stick on it, right? We can add some of these other things. But I'm kind of thinking, though, if that's the way that we want to go with it, that I should probably get the machine learning stuff going. So we should be building the stuff to send it to a separate Python server and analyze it over there. And then we could combine all of the stuff that we've got to see what, you know, see what it sorts out. But, yeah. We can do that tomorrow. And then during my personal time, I will probably start a platform. But it's time for me to get going, guys. So I will see you tomorrow. In the meantime, stay excellent. Hey, make sure you go and watch the latest video. If you haven't, give it a like. The one about agent-based modeling and complexity economics.